Realtors, does an FHA mortgage always mean that a buyer has poor credit? Not necessarily. There are a few circumstances in which a borrower who has good credit could elect to utilize FHA financing versus a conventional mortgage. Today, I want to walk you through those scenarios and help you understand a little bit more about FHA financing and maybe not be so quick to deny an offer or encourage your buyer from denying an offer that from a buyer who's seeking or utilizing FHA financing. First, my name is Steve Doherty. I'm a loan officer in Raleigh, North Carolina, and a United States Marine Corps veteran. If you would like me to walk your buyer through any of these scenarios, or if you would like to discuss conventional versus FHA, I will leave my contact information in the video description and in a pinned comment below. I look forward to hearing from you. Okay, so for starters, an FHA mortgage is more permissive of a high debt to income ratio than as a conventional mortgage. A conventional mortgage, even with perfect credit, will not allow a borrower to have a debt to income ratio of more than 49.99%. In other words, they cannot have monthly debts and a housing payment that total more than one half of their gross monthly income. But an FHA mortgage could permit a borrower to have a higher debt to income ratio than that, maybe as high as 55% with good credit. So theoretically, an FHA mortgage could permit them to have a higher budget, tolerating a higher overall monthly payment than a conventional mortgage, and maybe that's why they're pursuing FHA financing. The second reason is maybe their FHA mortgage is offering a lower total monthly payment. For low down payment options, for borrowers who have credit scores between 700 and 720, even though both mortgages would be available, meaning that a borrower could be pre-approved for an FHA or a conventional mortgage, the FHA mortgage may have a lower overall monthly payment. The mortgage insurance on an FHA mortgage is fixed. It is not tied to a credit score. So let's say sub-perfect credit, like between a 700 and 720, is going to be perfectly forgiving of that credit score. Also, the interest rate could be much lower on the FHA mortgage at that credit score. So it could give them a lower monthly payment, and maybe that's why they're pursuing FHA financing. Another reason is that FHA is more permissive for negative credit events like bankruptcies. In other words, a borrower could be eligible for an FHA mortgage faster post-bankruptcy discharge than they would be on a conventional mortgage.